Hi, John. How are you today?
I'm good, like you and many others. We're still digging out from snow, sleet, and cold weather. I know a lot of people have been hit with it. That I'm in Northern Virginia. We typically don't get much snow, but got a lot, and it's been really cold in Milwaukee. So everybody's dealing with all this. So that's always fun in January when nothing's going on.
We were talking to Rick Small yesterday, and he mentioned that they had, what did he say, about an inch of ice.
Right, and it's in Charlotte. All right, a bunch of things, both domestic and international. The first one, this occurred late last week. Trump filed a lawsuit. Oh, that's unusual. Oh, no, wait, it's not. But this one is a $5 billion lawsuit against JPMorgan and specifically CEO Jamie Dimon, accusing them of debanking him by closing several of his accounts after January 6th. It was filed in a Florida state court, Miami-Dade County. JPMorgan denied that it closes accounts for political or religious reasons. The quote from JPMorgan is the following: "While we regret President Trump has sued us, we believe the suit has no merit. We respect the president's right to sue us and our right to defend ourselves." So that's going to be interesting to see how that plays out. You'll remember that Florida is one of the couple of states that does allow litigation if you believe your accounts have been closed for political or religious reasons. So I believe this is the first time that statute's been utilized. I could be wrong, but that's why they filed, even though Trump's located in Florida, I think that's why they filed the Florida courts.
Yeah, there isn't a federal right, although it is possible.
Not
Again,
yet.
not yet. There are methods where this may end up in the federal courts. We'll have to see, but they would still be applying state law.
Before I hand it back to you, just to stick with the US for a moment, the Wall Street Journal had a lengthy piece by a couple of their reporters about one of the Fed governors, Michelle Bowman. She's the vice chair for supervision. They say she's cutting staff and there's concern about oversight. The article goes into detail about that in terms of why they believe that's the case. They have some people that they've talked to, but here's a couple quotes. Ultimately, according to Bowman, she wants to make the exam process more transparent and fair for banks. She's criticized the Fed's examiner for focusing, quote, on procedural and documentation shortcomings, which is something that, frankly, some of our clients have certainly referenced. But they also believe that cutting staff and reducing oversight could be problematic. So we'll see what happens. It's not a surprise. She's given a lot of speeches about regulatory burden relief since she's been in that role. So a piece by the Wall Street Journal that came out a couple days ago.
Moving to Europe to start at a high level, AMLA has started the data collection process to select the 40 firms for direct supervision. So just to remind our listeners, as part of the AMLA regulation, AMLA, the FIU, will, in addition to being the FIU for the whole group and harmonizing the FIUs at the individual member state level, it is going to be the prudential regulator for 40 financial services companies. I went back and looked to refresh my own recollection, and it's not the 40 largest. It's actually more about those that are among the highest risk institution under the EU-wide methodology. So they're going to look at if they're highly cross-border, meaning they operate in at least 6 member states. They're high risk in terms of their inherent residual money laundering and terrorist financing exposure. They're systemically important in the EU financial system. And if they've demonstrated concerning supervisory histories. So they're in the data collection now. The process will go on in 26 and 27. The initial wave of direct supervision will begin in 2028, and it actually gets updated on a 3-year cycle. So for those of you in the EU, you're already aware of it. For those of us in the United States and other parts of the world, it's an interesting approach to things. The Spanish FIU has recommended fining Santander, which is a large Spanish bank, 40 million euro due to a number of AML issues at Open Bank, which is its online unit. For that to go forward, the Spanish Council of Ministers has to make a final decision about the fine. The bank has indicated that these were not money laundering, they were more procedural and risk management issues, and that they've already been fully resolved. But interesting, Santander is a big operator. And again, interesting in the online unit. And then moving to Australia, Austrac has launched a probe into a large payments platform, Airwallex, to take a look and see whether it is doing what it's supposed to do with regard to its anti-money laundering program. They have the authority and they've exercised it to appoint an outside auditor to go and do the review. The interesting thing about this is that the company was in the process of gearing up to do a multi-billion-dollar stock market listing, so an IPO. And this could slow that down. We'll have to see. This is a company that facilitates transfer of funds to multiple jurisdictions. And so, again, the explosion of these global payment platforms that are outside the traditional platforms are presenting challenges as they come up to speed and whether or not they're effectively doing what's expected of them. John, what else do you have?
Back over in Europe, in the UK, the Bank of Scotland has been fined for breaking sanctions related to the Russian war in Ukraine. That's the Office of Financial Sanctions Implementation, OFSI. The penalties are for transactions dating back to 2023. They said the bank processed 24 payments in February from a personal account. That account was not identified. The Sanctions Office, which oversees compliance on behalf of the UK government, said it had concluded that the bank breached prohibitions on dealing with and making funds available to a sanctioned person. The Bank of Scotland said that it flagged the issue to the UK authorities for the following month, and so the penalty was cut by 50%. And Bank of Scotland, by the way, is part of Lloyd's. It was cut by 50% because it voluntarily disclosed the breaches a month after the payments were made.
The Wolfsberg Group that we've talked about a lot, and I know you've done at least one podcast with Alan Ketley when he was the head of the Wolfsberg Group, has announced that it's appointing Stevenson Monroe as a co-chair and Rachel Sloan to its management committee. This caught my eye for a number of reasons, but the biggest one is that you and I know Steve Monroe from his years at FinCEN, and he's now with Standard Chartered, and he oversees all the global anti-money laundering operations. Rachel Sloan is the BSA officer and head of global AML programs at Citi, and she's joining the management committee.
Europol has issued a report. This one includes tactics in maritime cocaine trafficking operations. So just a couple of days ago, they released this report. This provides an analysis of the many ways that criminal networks traffic cocaine via maritime routes. And according to the report, cocaine trafficking in Europe has reached what they say are unprecedented levels, driven by high production in Latin America and increasing demand within the EU. So that report is worth looking at, obviously, for those of us that need to stay on top of the various ways in which criminal organizations can move illicit activity and illicit funds that come from that kind of trafficking.
A former TD Bank employee in New Jersey has pleaded guilty to taking bribes in order to orchestrate a money laundering operation of nearly $30 million. As I said to you before we started recording, it wasn't a fancy operation. He took bribes, and what he did is he created accounts in the names of shell companies that he registered, and then he issued debit cards, which he shipped to Colombia, and then the money launderers in Colombia withdrew the clean cash at ATMs. There were 600 debit cards issued and more than 120,000 ATM withdrawals.
Wow. Yeah, that's crazy. In addition to the Europol report, there's a couple of other reports that are interesting. I know you saw the one from Chainalysis. What did you see there?
Chainalysis has come out with their 2025 report, and they noted that criminals used crypto to launder $82 billion in 2025. This is up sharply from 10 billion in 2020, and they attribute a big part of the increase to the fast-growing Chinese-speaking groups. A lot of these Chinese language money laundering networks are using crypto. They emerged during the pandemic and processed more than $40 million per day worth of crypto in 2025. And I know you saw that TRM Labs also published their 2025 report.
Yeah, it's interesting how those things came out pretty simultaneously, right? So the TRM Labs, they report that illicit crypto activity reached $158 billion in 2025, up nearly 145% year over year, which is crazy. Other parts of the data, again, this is their 2026 crypto crime report, which obviously assesses 2025. But here's what stood out based on the authors of the report. Sanctions-related activity in 2025 was overwhelmingly driven by Russia-linked flows. This remained a major driver of losses, but were highly concentrated. They say that illicit actors stole 2.87 billion across 150 hacks in 2025. Fraud remains persistent and industrialized. Illicit activity continues to shrink relative to the size of the ecosystem, which is a little counterintuitive from here, but they say illicit flows declined as a share of total crypto activity. Anyway, the takeaway is clear. This is, again, I am quoting, crypto crime is rising in absolute terms because crypto itself is becoming global financial infrastructure, according to TRM Labs. So the full report, they posted it on LinkedIn, and you can certainly get it on their website.
And I know you wanted to update our listeners about something that came out of House Financial Services.
Well, we talked last week or after we recorded, that the House the Financial Services Committee was considering several pieces of legislation. They did pass those. One would increase the thresholds for cash reports in the U.S. from 10,000 to 30,000, and another would increase the filing thresholds for suspicious activity reports from, I think they said, from 2 to 5, and some other changes. Bottom line is these bills have to go to the full House and then to the Senate. So the question of whether that will occur is certainly a question. I'm not sure. I think the Senate does have similar legislation. I don't know if the threshold dollar amounts are the same, but it is something worth looking at because there's been active conversation about changing the AML infrastructure, and changing the reporting threshold certainly would impact the infrastructure.
Yes. The basis of the changes is part of this drive for burden relief. We've certainly heard from a number of folks at larger institutions that particularly the currency transaction reports, are so routinized and automated that they're not a meaningful burden at this point. For small and medium-sized banks, that may not be true, where it's a more manual process, and also happens less often, and therefore it's a little harder to stay on top of it since you're not doing them in gigantic volume.
Correct. I have one more item I want to mention. We would be remiss if we didn't identify the horrific shooting and murder of Alex Preddy over the weekend in Minneapolis. Everybody has seen the various versions of the video, and there's still activity going on in terms of whether there'll be legitimate investigations. But I wanted to mention this from a standpoint of the private sector. The Minnesota Chamber of Commerce released a letter on January 25th of more than 60 CEOs, including U.S. Bank. And the full text of the letter you can read online, but I will mention a couple of items from it. They say, with yesterday's tragic news, we are calling for an immediate de-escalation of tensions and for state, local, and federal officials to work together to find real solutions. There's more in the letter than that, but I did want to mention that because all of this will impact our world, because anytime you're dealing with security related issues, it's relevant to law enforcement and relevant to how our industry interacts with these organizations.
All true. Our February webinar will be the 26th of February and live streaming at 1 p.m. Eastern Time. You can register for that now, and I'll be moderating a great panel and talking about how to enhance the strategic value of SARs. You can sign up for that, and we'd love to have you. And if you missed our webinar last week on human trafficking, it should be available on our website when you hear this.
Hey, one thing on human trafficking, I just saw that the Marriott Corporation was complimented on the amazing work that they have done in terms of training and awareness dealing with human trafficking. It's always good to recognize when private sector entities step up. And according to government officials and outside anti-trafficking organizations, the Marriott Corporation has done a tremendous job. So I thought I just saw that come across here. I thought I'd mention that.
That's great. John, you want to give our first official plug for the AML Partnership Forum?
The fourth annual forum will be in Washington, D.C., 19th and 20th of March, 2 days instead of 3 this time. We have an exciting group of panelists and presentations. The information is available on the AMLPF website. We have some really excellent sponsors for the event. It's going to be your opportunity to interact with not only private sector, but public sector folks that work together on AML-related issues. So we hope you can join us in Washington, D.C. in March.
John, you try to stay warm. I'll try to stay warm, and hopefully you won't get any more snow.
They say over the weekend, we'll see.
All right. Bye-bye.